The stock market could be in trouble if Jamie Dimon is correct. And speaking of trouble, any of the Tesla bears out there today absolutely getting decimated, with Tesla being up over 21% on the session. We look at the fear and greed index, we are sitting at 64. We're actually able to move up one tick closer to extreme greed. However, when we look at the latest investor sentiment survey, notice the bears got a little bit more aggressive, 29.9%, and the bulls dropped substantially down to 37.7 versus the previous week at 45.5. So what does all this mean moving forward? When we come over and look at how the indices fared across the board, the Dow was down 140 points. NASDAQ was up 138 points. S&P 500 up 12.44. Russell 2000 down 0.51. Now, when we look at advancing issues versus declining, we had 55.4% of issues advancing on the day. When we look at the sectors across the board, consumer cyclicals by far leading the way today. But as you probably guessed, Tesla, that's what it was all about today. When we look at the heat map real quick for the NASDAQ, look at Tesla, right? Up 21.92. And by far, it is the biggest mover out of the NASDAQ. And not only the NASDAQ, but also we look at the S&P 500, the biggest mover for the S&P 500 as well. And if it wasn't for Tesla, the market probably would have looked quite differently. We look at the dollar index today, forming a bearish engulfing-ish looking candle. Now the question is this going to be a little head fake and we start going back up, similar to what we saw back over here, or are we really going to start to get the pullback back down? MACD indicator is a little bit elevated at this level. And then we come over and look at gold. Gold today basically forming an inside day, but nonetheless, gold was up 19 points on the session. Then we come over and look at crude oil, basically a candle of indecision. We have a wick on the top, wick on the bottom, and then basically a candle body right in the middle of the range, a little bit slightly lower than the middle. However, this is nothing more than a candle of indecision. Now, keep in mind, if and when Israel decides to escalate things in the Middle East, the first sign we want to pay attention to is crude oil. If we see crude oil rocketing up, then we also want to look at gold and even the volatility index. And speaking of the VIX today, the VIX was down 19 cents on the session. You can see earlier on, the VIX was up and then just dwindled lower as the day progressed on. Now, we come over and look at the diamonds real quick. Notice the last two candles were down days. However, we have wicks on the both of the bottom of those candles, and we're coming right into that high volume area that we've been speaking about over the past couple videos or so. And let's not forget, we're still in the midst of earnings season. And speaking of earnings, this morning before the bell, we take a look at UPS. UPS was a rocket ship on the way up, but unlike Tesla, we saw UPS starting to go a little bit lower. We can see it right here. The big gap up came down about 50% of the gap, then essentially just went sideways the remainder of the day. Now, as we come over and look at the small caps real quick, we have the Russell 2000. You can see yesterday we had a wick on the bottom, a hammerish candle. Today, we also have a wick on the bottom of that candle, and the low is higher than the prior day, but the high was able to make a slightly higher high. Now, yesterday we came right down to 78.6. So maybe we're going to have this ABC pattern on the way up, which would take us a little bit above the swing high over here. I think right around 230 or so would be the price projection for that. However, when we look out here on the 1 hour chart, notice the MACD indicator is starting to firm up here just a bit. We do have a bullish cross. On the 30-minute chart, we're talking about this morning. We also have the MACD indicators crossed up and moving up at a 45-degree angle on the way up. Now, the question is, will they be able to maintain that trajectory for tomorrow? We look tomorrow at the economic calendar. What do we have on deck? Well, starting off at 8:30, we have core durable good orders coming out. Then at 10 a.m., we have revised consumer sentiment, followed by revised inflation expectations. Now, we can see the Qs are right back in this consolidation box up here. However, let's take a look at some of the big flyers in the Qs. For instance, we take a look at NVIDIA. It was up 85 cents on the session, still hanging around near all-time high territory. Then we come over and we look at Apple. Apple today has back-to-back hammer candles on it, and Apple today was only down 19 cents. And I say only because early on, Apple gapped lower and was able to find its footing and actually closed near the upper portion of the range. Then we come over and we take a look at, let's say, Meta. Meta today was up $4.09. We take a look at Microsoft. Microsoft today was up 13 cents. So not a lot going on there, but Microsoft's had this little push up. Now the question is, can we firm up around this area? If today's low does not hold, watch out. Microsoft's probably coming down towards the lower end of this range, maybe even all the way back towards 410.69. So as we jump back over and look at the Qs, knowing that we're in the middle of the range out here on the daily chart, what is going on? Well, in the middle, what do they say? Don't diddle in the middle. Then we come over and we look at the 4-hour chart. What do we got going on there? Well, 4-hour chart, you can see this morning we had the gap up, and we actually talked about this today during the live stream. Which gap was going to get filled first? Well, you know what? Neither gap got filled. So now we have a conundrum where we had a gap down, we have a gap up. Now, what is going to be in store for tomorrow? Because tomorrow morning, if we do gap up tomorrow morning, by default, I will be looking to fade the gap. Why is that? Because when we have two back-to-back gaps, then I expect the second gap to get filled. And that goes without question on any day. Now, does that guarantee that's the way the market's going to shape up? No, absolutely not. However, if we do gap up, I would love to see the market come all the way up here, filling the gap up here at about 496.03. However, tomorrow morning, if we do start gapping lower, that's not necessarily a situation where I want to fade the gap. Instead, I want to look and say, all right, are we above or below value area low, which comes in at 491.09? If we're below it, then I want to play down towards gap support, 489.48, and then maybe all the way down here for this gap to potentially come back and be filled. Now, I want to make everybody aware, Apex having a massive 80% sale off all their valuation accounts, passing as little as 1 day, and $85 activation fee across all account sizes. If you're a trader that likes to trade the 150, 250, and 300K accounts, after using promo code Mike, you can get those accounts for only $50. To take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. There could be trouble brewing ahead. If you believe what Jamie Dimon is saying, he's basically saying WW3 has already begun. Now, hopefully, Jamie Dimon is incorrect about this. All the tensions simmer down. But if this is going to be the case, could the stock market be on the verge of suffering a major shock? We come out here and we look at the weekly volume profiles and notice right now we're right back near that point of control. And as we're looking at this, what are we expecting from here? Well, on this profile, I don't have a huge edge. We can see that looking at last week's value area low, we've been below it. Now we're back above it. So we would expect the market to rotate higher. Fridays tend to be more bullish than bearish, which would also lend towards the bullish case. Then we come over here and we look at the daily profiles, and we talked about this during the live stream. We have a very well-defined D as in dog shape profile. However, I want to put a caveat on this as well. I want to pay attention to this level right down here, this zone. That zone will come in anywhere from 20,293 up here to about 20,304. Now, that's a little bit different than the volume profile levels, but let's talk this through real quick. You can see that value area high is about 20,380.00. Right now, where are we at? We are currently above that. What else do we have above us? We have an untested point of control at 20,432. So if we stay above today's value area high, I do want to target this area up here, that untested point of control. But I also, if we come back down below value area high, want to target the point of control, 20,354.75, and value area low at 20,314.25. Now, if we do get below that, again, I do want to use this minus development area as a potential target, but only if we are trading below value area high from the prior day. Now, as we come over, look at the SPY real quick. What is going on this front? Last 2 days, counting today, we have tails on the bottom. So will we be able to get a late week push all the way back up towards all-time highs? Keep in mind, we still have an ABC pattern up here about 592.09. On the 1 hour chart, you can see the MACD indicator just starting to get a fresh cross on the way back up. Then as we dive down, look at the 30-minute chart. Notice today we gapped up, but the SPY was able to come down, fill in the gap, and then we basically closed near the upper end of the range. But for all intents and purposes, today's range was an inside day. The high was lower than the prior day. The low was higher than the prior day, which means tomorrow is likely going to be a breakout or breakdown from this pattern. MACD indicator is crossed to the upside at about a 45-degree angle, but we must pay very close attention. If we're still trading around this area tomorrow, MACD indicator gets near the zero line, watch out. That could be nothing more than a recharge point for another leg lower. And again, the key is going to be, are we trading below value area low or not? As we come over and we look at the futures markets real quick, what do we got going on? Well, we still have this double top pattern that will complete anywhere from 57.72 to about 57.80. And as we look at this, we're back above the prior week's low at this moment. However, the question is, will we be able to stay above it? And we have a pattern that is starting to potentially form, and that could be an ABC pattern on the way up. The A to B leg is the impulse move. The B to C leg is the corrective leg. That gives us a price completion at about 58.90 and a half. However, if we cannot get above the high right here, then that pattern would be negated. And if we come below the low of this wick on the 4-hour candle, that would also negate the trading pattern. Now, as we come over and look at the daily profiles for the S&P 500, notice we have this minus development area, which we've been talking about during the live streams. Speaking of live streams, if you want to make sure you don't miss the live stream, next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But one, this could be acted as a target location and can also be acted as a rejection point. The first time we come into it, expect a slap back down or a consolidation. We come back into a second or third time, I expect that level to break. Now, when we look at the volume profile levels, notice we're trading right near value area high at 5853.50. The point of control is going to be 5850.00 with value area low being 5841.50. So if we break above value area high, by default, I want to target this area here. Then if I start seeing signs of weakness in the market, I may want to play back down towards this point of control. Now, hopefully that point of control is left as an untested point of control when we get up towards that area, because that would increase the probabilities of that level being tested out. Now, if you want to learn about Apex 3.0 and all their new rules, make sure to watch this video right here.